We take a look at the Asian markets and they are looking good, getting a good handover from the Wall Street, which snapped a 5-day losing streak. The Dow rose about 200 points, and this despite the Boeing taking it down by about 150 odd points. So we're seeing the Nikkei do fairly well, 1.6% gains out there. Some weakness seen in the yen as well. Good news for the Japanese exporters. Yesterday it was around that 111 handle. Now it's softened a little to 111.4. This also on the back of a sharp rally that we saw on pound, as Theresa May did manage to clinch a Brexit deal, a last-minute Brexit deal. So all of that uncertainty suddenly lifting off, taking all the other markets higher. If you take a look at the Korean markets as well, they're higher, led higher by a lot of their chip makers, higher by about 0.75%. Similar is the sort of fate that we're seeing for both the Straits as well as the Taiwanese indices, close to around 0.9% for Straits and 0.75% for Taiwan. What does that do for India? Well, the SGX Nifty now, for starters, indicates a 50-point bump up. Remember, the Nifty futures premium is close to around 35 points. So if you adjust for that, the SGX Nifty indicates that maybe our markets were likely to start at around that 10,230 points, which is a fair amount of a positive. And it'll be important to see whether we sustain out there or not. Given this week's options, we have the maximum open interest at the 11,200 call. So if it does sustain for a sustainable period above that 10,200 mark, we will see a fair amount of short covering.
All right, SGX Nifty is looking good. Let's move on to the US markets, where the stock snapped a 5-day losing streak to close higher as technology shares rallied, offsetting the big decline in Boeing shares. The Dow Jones closed 200 points higher. The S&P 500 gained 1.5%, while the Nasdaq advanced around 2%. CNBC's Leslie Picker gets us a wrap of all the action on Wall Street.
U.S. stocks getting a pop today, with the major averages shrugging off a 5-day losing streak. The Dow tacking on 200 points, the S&P climbing 40, and the Nasdaq gaining 149. Shares of Dow component Boeing under pressure today, sinking nearly 6%. The move follows a second tragic accident involving one of its 737 MAX 8 airliners. China, Indonesia, and several airlines are grounding the MAX 8 after 157 people were killed in an Ethiopian Airlines accident this weekend. Regulators in several countries, including the U.S., are investigating the accident, which is the second crash for the plane in 5 months. Meanwhile, Apple announcing March 25th as the date of its next press event. While the invite was light on details about what would be announced, it's widely speculated that the tech giant will unveil a new streaming TV service. The invite comes on a strong day for Apple, which saw its shares climb 3.5% thanks to an upgrade from Bank of America. And chipmaker NVIDIA telling investors it will buy Israeli chip designer Mellanox for nearly $7 billion in cash. The deal expected to boost its cloud business. NVIDIA up nearly 7% today on the news. That's the action from the U.S. market. Back to you in Mumbai.
Right, that's the action from the U.S. market. So let's hear out some opinion coming in from Tobias Levkovich of Citi on the U.S. market and the dollar trajectory, more importantly, going forward.
I continue to think that a lot of investors missed this kind of big trade that we had. You know, we can talk about last week being down, but the prior 8 weeks were up pretty strongly. And many investors really didn't take advantage of the weakness we saw in December to kind of step up. So you tend to sense that this pain trade will be even moving higher. And on the dips, people do want to put some money to work. Look, the earnings expectations have come in meaningfully from where they had been in the fourth quarter. And you probably have some potential for some upside surprises in the first quarter. Earnings revision trends have stopped going down, and that's kind of a positive dynamic for the market. It is really important. The dollar has been an incredible indicator for the relative price performance of U.S. securities relative to others. So if you look at the S&P 500 versus emerging markets, for example, the dollar tends to be a huge influence there. The dollar's rising, the S&P outperforms emerging markets. Commodity prices obviously very heavily influenced by the dollar, and as a result, certain sectors like energy will be impacted by the dollar. So, you know, from that perspective, I do understand it, but the dollar is also a safe haven for a lot of investors when they get and are concerned about troubles abroad.
Donald Trump unveils 2020 budget plan, from Mexico border wall funding to tax cuts. Eamon Evers is here to tell us what he requested.
It's a big budget. Here are some of the top line numbers. $4.75 trillion overall in the president's budget request this year. The defense spending would increase nearly 5% under the budget proposal. Non-defense discretionary, that's basically everything else that the government chooses to spend money on each year. That would be cut by nearly 5%. There is border wall funding in there, $8.6 billion for border wall construction, $1.9 trillion in savings overall from programs, including some of the social safety net programs, including things like Medicare and Medicaid, over 15 years. Not the normal 10-year budgeting timeline, but over 15 years. The White House says that this budget would balance. Now, it was expected that this budget would be dead on arrival on Capitol Hill, and Speaker of the House Nancy Pelosi confirmed that in a statement just a short time ago. She said the cruel and short-sighted cuts in President Trump's budget request are a roadmap to a sicker, weaker America. And guys, I can tell you that we just had Russ Vought, the acting director of OMB, out in the White House press briefing room a short time ago, and he said that despite the nearly $1 trillion annual deficits implicit in the president's budget request here today, he says this is a fiscally responsible and common sense budget. He blames folks up on Capitol Hill for not going along with some of the spending cuts that the president has previously proposed for those $1 trillion deficits. Guys, back over to you.
All right, across the Atlantic, the European markets, they finished in positive territory, led higher by banks. Investors were awaiting a scheduled UK parliamentary vote on Prime Minister Theresa May's Brexit, which is scheduled later today. And thereafter, we did get the positive news coming in. More importantly, however, the banks, they rose. So the German index outperformed about 0.75%, and that's primarily because a couple of their banks, Deutsche Bank as well as Commerzbank, were higher on merger talks. So Commerzbank ended 7% higher, while Deutsche Bank was higher, or the banking index itself was higher by 8.5%. A couple of these aviation stocks, they declined following the Ethiopian air crash. So that was one sector which wasn't doing fairly well. But by and large, the European market's doing fairly well. But it's a crucial day today.
Absolutely. It is a crucial day in the British Parliament today, as lawmakers are scheduled to vote on Theresa May's Brexit deal. In a last-ditch attempt, the Prime Minister has clinched legally binding Brexit backstop changes. May announced 3 documents, a joint instrument, a joint statement and a unilateral declaration, which she said were aimed at addressing the most contentious part of the divorce deal, which is the Irish backstop. Hear out what the UK Prime Minister and EU Commission President had to say.
I stand by what that deal achieves for my country. It means we regain control of our laws by ending the jurisdiction of the European Court of Justice in the UK, regain control of our borders by ending free movement, regain control of our money by ending vast annual payments to the EU, the end of the common agricultural policy and the common fisheries policy for British farmers and fishermen, an independent trade policy. And the deal sets us on course for a good future relationship with our friends and allies in the EU. The deal honours the referendum result and is good for both the UK and the EU.
In politics, sometimes you get a second chance. It is what we do with this second chance that counts, because there will be no third chance. There will be no further interpretation of the interpretations and no further assurances on the reassurances. It is with this in mind that I hope and I trust that today's meaningful legal assurances will be meaningful enough for the meaningful vote.
Let's also hear out what market men have to say on the Brexit negotiations and the likely outcome of the same.
I think it's been an unmitigated disaster for the United Kingdom. And in the short term, it's made the United Kingdom almost uninvestable because we have 2 such contrasting scenarios facing us. No one knows which way we're going to go. The huge priority for the UK now is to get this settled.
We know that a messy Brexit would be bad for markets worldwide, but we really have nothing to do. We have no contribution to make to the discussion. And so it's not often that American investors feel like they're just along for the ride, but that is certainly the case now. But we have bumped up against 27.99. That's the high so far tonight. 2,800 in our S&P has really been a tough level to get above and stay above. You know, if we got some good news about Brexit, and we also got some good news regarding trade tensions with China, I think the 2 of them would be necessary to get the S&P above 2,800 to stay.
When the currency space, dollar holds steady while the pound jumps as Theresa May secures Brexit concession. Meanwhile, safe haven Japanese yen strengthens versus the US currency.
In the world of commodities, crude oil gains on Saudi Energy Minister's comments that the OPEC-led supply cuts were unlikely before June.
All right, then let's take a quick break. Up next, all the cues and news you need to know for trade this morning.